stock market has been doing very well so far this year in 2024, with S&P 500 up 12%. But on the contrary, Cathie Wood's ARK Innovation ETF, with the ticker symbol ARKK, has been struggling. It's down 10% year to date. If the major US indexes aren't performing well, like the year 2022, then Cathie Wood can use that as an excuse for its underperformance. But right now, even the large cap stocks are doing well. So why is ARKK still doing poorly right now, even though the indexes are doing so well? I think the reason is simple. It's because the stocks that's making up the index hasn't been performing particularly well. Right now, the top 10 holdings of ARKK ETF is about 60% of the weight, and 3 out of the top 10 holdings are unprofitable companies such as Roku, Roblox, and CRSP. And there is one thing in common for the top holdings, which is the stock price all peaked during the pandemic when there was easy money given out by the Federal Reserve. So when is the next time that ARKK can fly again? I think the next time it's going to happen is when the next market crash happens, when Federal Reserve is applying dovish policies such as rate cut and QE again to try to fix the market. And the chart shows you the blue cycle, which is the economic cycle, the orange cycle, which is the market cycle, and if you draw a vertical line, it shows you on top during these cycles what kind of sectors will outperform. As we can see, when the economy crash, when the new market cycle begins, it's the sectors like technology, discretionary, comms, communication services, those high growth, high flyer stocks are able to outperform under such environment. Well, last time ARKK ETF saw a significant boom was during the pandemic economic downturn, where the Federal Reserve swiftly went into action to produce the largest QE America has ever seen, boosting the ETF price. ARKK at one point was up over 300% during the pandemic QE. In the current high yield environment, with our 10-year treasury yield at about 4.4%, markets tend to favor something else. They tend to favor cash flow generating stocks over high growth, unprofitable companies, because in a high interest rate environment, the cost of capital is very high, making it very expensive for companies that relies on borrowing money to grow and expand. So therefore, the investors are seeking stability and predictability. That's why they buy high cash flow generating machines. So in simple language, the market prefers more established companies like the large cap technology stocks like Apple's, Google, Microsoft, Amazon, Nvidia, and so on. And another big question is, are the ARKK holdings truly innovative, as their titles suggest? If you look at their top holdings, a lot of those companies were successful at making headlines on the news agencies, but they were not really able to make long-lasting innovative impact. It is companies like Microsoft / OpenAI, Google, Nvidia that's actually driving a substantial amount of innovation that's currently transforming various industries with their AI technologies and greatly improving human work efficiencies in many, many areas. I'll give you an example. One of the top holding is Zoom. Right? So Zoom provides video conference software. The software technology is not proprietary. It's not that unique. It's very easy for competitors to replicate, such as WebEx, such as Microsoft Teams, such as Google Meets. Right? It's not a very disruptive technology at all. Another example is the streaming service provider Roku. The technology is not highly innovative. It's a very competitive landscape. Everybody was able to do it. And another example is Coinbase. Coinbase being the only listed cryptocurrency exchange company in the U.S. stock market, it's actually not that disruptive. There's a lot of competitors out there who are just decide not to be publicly traded, but there's a lot of competitor out there who can do the same thing. Binance, Kraken, or Gemini, and so on. The most controversial stock is actually Tesla. Right? It's been a hot topic for many years. It's currently facing fierce competition from the Chinese EV companies such as BYD, Baidu, NIO, or XPeng. As the Chinese EV companies are expanding quickly into the European market, China has been the manufacturing hub of the world for the past decades, benefiting from low labor cost, economies of scale, and very well developed supply chain and manufacturing facilities and infrastructures, making China extremely competitive in whatever they do. Because a lot of our stocks are not truly innovative, at least not reflected in their earnings report, that's why you see the stock price goes down drastically, because when initially the stock price was up, there was a lot of anticipation built into it. And if the companies are not able to deliver in their earnings report as initially expected or anticipated, it's going to cause a crash in the market price. And that's what we're seeing right now. And Cathie Wood also has made a lot of promises. For example, he has made a very famous promise regarding her ETF performance. She promised her investor that ARK-K would deliver an annualized gain of 20% over the long term, which is, she said, a 5-year horizon.
For the next 5 years, we believe that our returns will compound at an annual rate of something in the low 20% range. And this is in a market where traditional equity returns have been in the 7 to 8% range over time.
But has her stock been performing as what she has promised? So in 2014, when ARK-K first publicly traded, it was trading at $20.38 per share. Right now, 10 years later, 2024 is trading at $45.45 a share. So it's about an annualized gain of 8.35% instead of the 20% she was talking about. So the performance is roughly in line with S&P 500 in terms of annualized gain. But however, investors throughout the 10 years has to endure significant boom and bust cycles and extreme volatilities. So it's very hard to hold her ETF. So her action is actually very similar to Elon Musk, right? Elon Musk repeatedly predicted that Tesla FSD software is able to actually achieve fully autonomy for the past 10 years. So every year he made a promise on that, but it's been 10 years and his software is still not able to achieve level 4 autonomy. Cathie has also made a prediction regarding Tesla stock price. She said Tesla stock would reach $7,000 per share. And her prediction was made before the 3-for-1 stock split happened on August 2022. And back then, when she made the prediction, Tesla stock was priced at $1,200 a share. Right? So this type of exaggerated predictions actually captured a lot of attention in the market for both the Tesla stock and her own ETF, because Tesla is still her largest holding. I think for retail investors, what they need to understand is what Cathie is trying to achieve, right? How does she make money? She makes money by collecting management fee, right? If you look at the ARK-K ETF expense ratio, which is another word for management fee, she collects 0.75% fee annually. That's a lot of fee. That's a very high fee compared to a passive index fund. And even though her ETF hasn't been performing so well, her fund right now has $6.6 billion in there. That's a lot of money she's managing, and she's making a lot of money through managing those assets. Okay, so she has been a very successful salesperson. Let's put it that way. Okay, so as a takeaway for the retail investors, I think it's very crucial for them to approach investment opportunities with a clear and rational mindset. Avoid getting caught up on the sales pitches or on hype surrounding bold predictions. It's essentially to play the long game, right? And not to fall for the get rich quick schemes, because there's no such thing as free lunch. Okay, please subscribe to my channel. Thank you very much.